Welcome to the Weekly Option, the podcast for people interested in trading stock options. Each week, we cover trade ideas and opportunities in the stock market right now. Whether you're a beginner, a professional, or just curious about options, this is the show for you. Let's get started. Welcome to the Weekly Option. This is episode 412 on January the 30th, 2026. I'm your host, Eric, and in this week's show, we'll cover the trades from last week on SEALSQ Corporation, Redwire Corporation, Cleanspark Inc., and Intel Corporation. And we discuss 4 new trades on America's Gold and Silver Corporation, Gossamer Bio Inc., TeraWulf Inc., and Supermicro Computer Inc. Now, it's always great to hear from listeners. If you have any questions about the trades presented here on this show or even about your own positions, feel free to email me. You can email questions to eric@theweeklyoption.com. That's ERIC@theweeklyoption.com. I've also created a few videos to teach you all the basics of option trading that you'll need to know to be able to follow along with me on this show. You can visit our website and click on the videos tab to watch them, or visit the YouTube channel for the Weekly Option. Now, the markets finished the week with very small changes week over week. The Dow Jones Industrial Average lost 206 points, closing on Friday at 48,892 points. The S&P 500 index picked up 23 points, ending the week at 6,939 points. And now it's time for the topic of the week. The topic of the week is technical indicators. More specifically, which technical indicators are the best ones to use? Before the end of this, I will share with you the ones that I prefer to use. However, the best indicator to use is the one that gives you the information you need to be able to decide on the next profitable trade. Have you ever seen a video where someone is explaining a chart and they see things that you're not able to see? They seem to get insight from an indicator and a price chart that just does not click with you. That has definitely happened to me at times over the years, and I'm sure I'm guilty of creating videos that do the very same thing. So, if you need to have a chart that has lines and colors all over the place, but it allows you to make profitable trades, then keep using it. Some people swear by moving averages. Some people swear by Bollinger Bands or Keltner channels or the squeeze. Some people use the Ichimoku cloud. If it works for you, use it. You should understand what makes the indicator work, but beyond that, if it works, then use it. These days, I like to keep things simple. I mostly rely on a 20-period and 60-period moving average. I also like basic relative strength index, RSI, crossovers. Take the time to find what works best for you and then test it. It is only in testing that you'll see what works best and what doesn't. When it comes to technical analysis, don't expect it to predict the future. You just want something that gives you a better understanding of what price has been doing and what it currently is doing now. I'm also a longtime fan of Fibonacci retracement numbers. That's it. Find what works and test it out. If it works, make it work for you. So that's it for the topic of the week. Let's go ahead and get into the review of last week's trades. We're going to start off with our covered call on SEALSQ Corporation, symbol L as in Lima, A as in Alpha, E as in Echo, S as in Sierra. At the time, the stock was trading for $4.91 per share. I looked at buying stock and selling the February 5 call at 51 cents, hoping for a return of 12.22% in 4 weeks. Well, shares of SEALSQ lost 80 cents, ending the week at $4.11 per share. The call option we sold lost 33 cents, leaving us with a net loss of 47 cents if we were to close the trade out immediately. Now, the stock price is below the break-even price, which would justify an adjustment. I personally would lean towards holding off to see if this stock is going to rebound in the coming days. Now, we're still 3 weeks out from expiration. I can afford a few days before deciding to roll the strike lower. If I were to roll the strike lower right now, I would bring in another 25 cents, which would still mark a loss of 8 cents on the week. I like it more when rolling the strike lower clears out any loss on the week. So I definitely prefer to exercise a little patience on this one since there's 3 weeks left in the trade. Next up, we have the cash secured put on Redwire Corporation, symbol R as in Romeo, D as in Delta, W as in Whiskey. At the time the stock was trading for $12.50 per share, I looked at selling the February 12th half put at $1.45, hoping for a return of 11.60% in 4 weeks. Well, shares of Redwire fell 78 cents, ending the week at $11.72 per share. The put option that we sold gained 20 cents. There is currently a risk of being assigned on these shares because you sold an in-the-money put. Now, if you don't want to own the shares, I would simply close the trade and take the 20-cent loss. Now, another option would be to wait until you get assigned the shares. You'll still be able to keep the $1.45 you received for having sold the put. Then you would turn around and sell the 12 half call at 90 cents. Now, there's still 3 weeks left until expiration, so we have some time left to let this trade play out. It really just depends on whether or not you're comfortable owning that stock and making money using the wheel strategy. It can be very profitable, so I'm going to keep my options or my decisions open at this point, but I'll be deciding in the next few days how I'm going to play this out for sure. All right, we have our credit spread on Cleanspark Inc., symbol C as in Charlie, L as in Lima, S as in Sierra, K as in Kilo. At the time, the stock was trading for $13.69 per share. I looked at selling the February 12th half 12 put spread at 15 cents. That could give us a maximum possible loss of 35 cents per spread. Now, shares of Cleanspark lost $1.87, ending the week at $11.82 per share. The out-of-the-money put spread that we sold is now in the money. The stock price is roughly 50 cents below the break-even point. I would typically look to sell a higher strike call spread against this spread to create an iron condor. However, the upper strike call spreads are not valued high enough to really justify the added risk. So for now, I'm going to have to exercise a little bit of patience. Now, I could always just close the trade out or even roll the strikes lower or roll the spread to another month. We have 3 weeks, once again. Sorry to keep saying that, but keep that in mind. When you are short these options or spreads, let time work for you a little bit. So with 3 weeks left, we have lots of choices. Just make sure you do the math and understand the risk before making any adjustments. And our final trade on last week is going to be a debit spread on Intel Corporation, symbol I as in India, N as in November, T as in Tango, C as in Charlie. At the time, the stock was trading for $45.07 per share. I looked at buying the February 44 half 45 call spread for 34 cents, hoping for a maximum gain of 16 cents, or that would be a return of 47.06% in 4 weeks. Well, shares of Intel jumped $1.40, ending the week at $46.47 per share. The in-the-money call spread that we bought is now even more in the money. And with the stock price more than $1.50 above our break-even point, there's no need to make any adjustments right now. This trade's working out, so we're going to leave it as is for now. If it ain't broken, don't fix it. I'm just happy to have at least one win on the week. I was starting to need a little bit of encouragement. So that's it for the review of last week's trades. We're going to go ahead and dive into the new trades for next week. Again, all trades on today's podcast will use the February 20th expiration for monthly options in February. So we're going to start off with the cover call. I'm looking at a company called America's Gold and Silver Corporation, symbol U as in uniform, S as in Sierra, A as in Alpha, S as in Sierra. The stock ended the week at $7.41 per share. I'm looking at buying stock and selling the February 8 call at 80 cents, hoping for a return of 18.76% in 3 weeks. Now you enter this trade by buying stock for $7.41 per share and selling the February 8 call at 80 cents. This trade makes the most money if stock prices finish above $8 per share. The break-even price is $6.61 per share. In real terms, the stock purchase will require $741, and you'll collect $80 for selling the option. Next up, we have a cash-secured put on Gossamer Bio Inc., symbol G as in Golf, O as in Oscar, S as in Sierra, S as in Sierra. The stock ended the week at $2.27 per share, I'm looking at selling the February 1/2 put at 25 cents, hoping for a return of 16.67% in 3 weeks. Now you enter this trade by selling the February 1/2 put at 25 cents. This trade makes the most money if stock prices finish above $1.50 per share. The break-even price on this trade is $1.25 per share. In real terms, you'll collect $25 for selling the put option, and you'll have $150 locked up in case you need to purchase the stock. Next, we have our credit spread. I'm looking at TeraWulf Inc., symbol W as in whiskey, U as in uniform, L as in Lima, F as in foxtrot. The stock ended the week at $13.37 per share. I'm looking at selling the February 13 12/2 put spread at 16 cents. That could give us a maximum possible loss of 34 cents per spread. Now you enter this trade by selling the February 13 put at 89 cents and concurrently buying the February 12/2 put for 73 cents. This is a credit spread because we are selling the spread, and this trade makes the most money if stock prices expire above $13 per share. The break-even price on this trade is $12.84 per share. In real terms, you'll receive $16 per spread that you sell and have $34 at risk. And then our final trade on the week is a debit spread on Supermicro Computer Inc., symbol S as in Sierra, M as in Mike, C as in Charlie, I as in India. The stock ended the week at $29.11 per share. I'm looking at buying the February 28/2 29 call spread for 32 cents. That could give us a maximum gain of 18 cents, or that's a 56.25% return in 3 weeks. Now you enter this trade by buying the February 28/2 call for $2.72 and concurrently selling the February 29 call at $2.40. This is a debit spread because we are buying the spread, and this trade makes the most money if stock prices expire above $29 per share. The break-even price on this trade is $28.82 per share. In real terms, you'll pay $32 to enter this spread, and your maximum gain is $18 per spread. So that's it for this week's show. I hope you guys have a wonderful weekend. I hope you are thawed out. If you live in the part of the country that got covered by ice and snow last weekend. So hope all is going well for you. Have a wonderful weekend. And as always, happy trading. Thank you for listening to the Weekly Option Podcast. Please subscribe to our show and visit us at www.theweeklyoption.com. Disclaimer, there is a very high degree of risk involved in trading. The indicators and strategies described in this podcast are for educational purposes only and should not be construed as investment advice. For our full disclaimer, visit our website at www.theweeklyoption.com.